There's a quiet revolution happening. It's not one fought with armies, but with algorithms. This isn't some far off fantasy. It's about the very foundation of your life. It's about the money in your wallet, the dollars in your bank, and who ultimately gets to control them. While you're watching the volatile drama of crypto, a much bigger, more systematic change is being engineered behind the closed doors of the world's most powerful financial institutions. Central banks, the guardians of our money, are getting ready to unleash their ultimate weapon in the war for the future of finance. They call it a central bank digital currency, or CBDC. They'll sell it to you as progress, efficiency, and convenience. But what if it's really about control? The kind of granular, programmable control over your life that used to be the stuff of dystopian sci fi. This is the story of the fight for your wallet, and maybe the end of money as we know it. There's a secret war being waged for control of your wallet. While everyone's distracted by the crypto roller coaster, governments worldwide are quietly preparing their ultimate weapon, a new kind of digital cash they can track, program, and maybe even delete. This isn't a movie plot, it's a real plan, moving faster than you think. In this video, we're exposing the government's blueprint to replace your cash, exploring the unprecedented power it would grant them, and revealing the battle that will decide who truly owns the money in your pocket. So, what exactly is a central bank digital currency? You'll hear officials describe it in reassuringly bland terms. The Bank for International Settlements, the Central Bank for Central Banks, calls it an electronic form of central bank money for households and businesses. They present it as a natural evolution. We went from gold coins to paper bills, from paper to plastic, and now they argue it's time for the next step. A digital dollar, a digital euro, a digital yen. But that description, while technically true, is dangerously incomplete. A CBDC is not like the money you use today. It is a radical departure from both the physical cash in your pocket and the digital money in your bank account. Let's break it down. First, how is a CBDC different from cash? Cash is anonymous. When you buy a coffee with a $5 bill, only you and the barista know. There's no digital trail, no database, no third-party approval. A CBDC, by its very design, would eliminate this privacy. As a digital token from the government, every transaction could be logged and monitored on a central ledger. The anonymity of cash, gone. Okay, you might be thinking, but I already use digital money. I've got debit cards, PayPal, Venmo. How is a CBDC any different? This is the most critical distinction, and it's one that CBDC proponents often gloss over. When you use Venmo or a debit card, you're moving commercial bank money. The money in your Chase or Barclays account is technically a liability of your private bank. The bank owes you that money. When you pay for something, you're just telling your bank to transfer its liability to another bank. The central bank is in the background settling huge balances between these commercial banks, but it doesn't have a direct window into your personal life. A CBDC would blow up this relationship. A retail CBDC would be a direct liability of the central bank. Think of it as having a bank account directly with the Federal Reserve or the European Central Bank. This would put the government at the center of every transaction you make. The buffer of the private banking system would be gone. This isn't a small upgrade. It's a fundamental rewiring of our financial system, placing the central bank at the top of all economic activity. And let's be crystal clear. A CBDC is not a cryptocurrency like Bitcoin. This is a deliberate point of confusion. Bitcoin was built to be decentralized. No central authority, no CEO, no government controls it. A CBDC is the exact opposite. It's the most centralized form of money imaginable, issued and controlled by one entity, the government's central bank. It uses the form of digital currency to achieve the function of ultimate control. So why are they doing this? Why are over 130 countries, representing 98% of the world's GDP, exploring, developing, or piloting CBDCs? The official narrative is a list of supposed benefits. First, they claim it will modernize our payment systems, making them faster, cheaper, and more efficient. Second, they talk about financial inclusion. The argument is that a CBDC could give financial services to the unbanked. In theory, anyone with a smartphone could get a digital wallet. Nigeria, for example, launched its Naira with the stated goal of reaching unbanked citizens. Third, they sell it as a powerful tool to fight illicit activity. They say the anonymity of cash helps tax evasion, money laundering, and terrorist financing. With a fully traceable digital currency, they argue, it would be much harder for criminals to operate. And fourth, they hint at more efficient monetary policy. In a crisis, a government could airdrop stimulus money directly into citizens' wallets. No more waiting for checks in the mail. These are the official reasons. They sound plausible, even noble. Modern payments, financial inclusion, fighting crime. Who could argue with that? but these are just the glossy cover on a book with a much darker story inside. The real motivations, the ones they don't advertise, lie in the unprecedented power a CBDC would give them. Imagine a world where your money isn't really yours, a world where every purchase you make is recorded and scrutinized by the government. Imagine that money could be programmed with rules you don't control. This isn't a paranoid fantasy, it's the logical endpoint of the CBDC project. For many of its architects, these dangers aren't bugs, they're features. First, let's talk about the complete annihilation of financial privacy. With a CBDC, the concept of a private transaction could disappear. Because it's a direct liability of the central bank, the government would, at minimum, have the potential to view every transaction in the economy. They would know what you buy, where you buy it, and when you buy it. Think about the data this creates: a perfect, immutable record of your life. The political causes you support, the doctors you visit, the people you associate with. In authoritarian societies, the implications are obvious. A CBDC becomes the ultimate tool of state control, allowing a regime to monitor and suppress dissidents with terrifying efficiency. But even in democracies, the potential for abuse is staggering, and privacy is a primary concern raised by the public in places like Europe. While many democratic nations like the UK and those in the EU are designing privacy safeguards to limit government access to data, the risk of surveillance remains a core tension. A centralized ledger would be the ultimate target for hackers and hostile nations. A breach wouldn't just expose a few bank accounts, it could compromise the financial data of an entire country. This brings us to the second, and perhaps most Orwellian, danger: programmable money. Programmability means the government could embed rules directly into the money itself. Your digital dollars could be coded to behave in certain ways. What kind of rules? They could start with expiration dates. To stimulate the economy, a government could issue stimulus funds that vanish if you don't spend them in 30 days. This has already been a feature in some of China's e-cny pilot programs, where smart contracts enable conditional payments. Then there are spending restrictions. Imagine your money being programmed to block certain purchases. Buying too much junk food, your transaction is declined. Donating to a political group that's out of favor, blocked. The money itself becomes a tool for enforcing social policy. It's no longer a neutral medium of exchange, but an active agent of state control. This programmability also opens the door to automated punishments. Think of negative interest rates. In a recession, a central bank could apply them directly to your wallet, slowly draining your savings to force you to spend. Get a speeding ticket? The funds could be instantly debited from your account. No due process needed. This leads to the third danger: absolute financial control. In a world without physical cash, where all money is a CBDC, the government gains a financial off switch for anyone it deems undesirable. If you protest a policy, they could freeze your funds. We saw a preview of this during the Canadian trucker protests in 2022, when the government ordered private banks to freeze accounts without a court order. A CBDC would let the government do this directly with a single keystroke. China's digital yuan, the e-cny, is the world's largest CBDC pilot, and it's a chilling blueprint for this kind of control. With hundreds of millions of wallets opened, the e-cny is designed to integrate with the country's social credit system. Behave and you get perks. Step out of line and your financial life could be restricted. The Chinese government openly admits one goal of the e-cny is expanding state control. In this context, a CBDC isn't a payment tool. It's an instrument of repression. So why now? Why this sudden global push for CBDCs? The answer isn't just a thirst for control, it's also fear. Central banks are reacting to a threat to their monopoly on money, a threat that came from the internet and now challenges their power. That threat is private cryptocurrency. To get this, you have to understand monetary sovereignty. It's the power of a nation to control its own currency. For decades, that power was absolute. No one could create a competing currency at scale. Then in 2009, Bitcoin was born. Bitcoin introduced a radical idea: a digital currency outside the control of any government. As Bitcoin and other cryptocurrencies grew, central bankers saw the danger. The threat is twofold. First, private digital currencies, especially stablecoins pegged to the dollar, started competing with national currencies. In unstable economies, people could abandon their local currency for a more stable private digital dollar, eroding the central bank's power. This isn't just a theory. The Bank for International Settlements has explicitly identified the rise of stablecoins and crypto as a key reason for accelerating their CBDC work. They see a future where big tech companies could issue their own global money, creating a massive power shift from the public to the private sector, From their perspective, this is an existential threat. They are losing their monopoly. In response, they've decided to build a system that solidifies their control. The CBDC is the government's answer to Bitcoin. It's an attempt to co-opt the digital currency revolution and re-centralize it under their authority. Project Hamilton, a collaboration between the Boston Fed and MIT, is a perfect example. While it explored different technologies, the project ultimately found that a centralized architecture was more effective for their goals. They took the shiny new tech but threw out its decentralized soul. This is the heart of the conflict. It's a battle between two visions for the future of money. One is decentralized and open, where individuals have sovereignty. That's the vision of Bitcoin. The other is centralized and permissioned, where the state sits at the center, granting or revoking access. That's the vision of the CBDC. They frame it as a choice between stability and chaos, but it's really a choice between freedom and control. Just as the plan for government-controlled digital money gathers steam, so does the resistance. The idea of handing so much power to the state has triggered a growing backlash from citizens, privacy advocates, and politicians who see CBDCs as a tool of oppression. In the United States, the pushback has become politically charged. In January 2025, President Trump signed an executive order to halt work on a retail CBDC, citing threats to financial stability and individual privacy. This reversed the previous administration's encouragement of CBDC research and banned federal agencies from establishing, issuing, or promoting a CBDC without explicit authorization from Congress. This sentiment is echoed in Congress. In July 2025, the House of Representatives passed the CBDC Anti-Surveillance State Act. The bill, which has not yet become law, aims to prohibit the Federal Reserve from issuing a CBDC directly to individuals, a move its sponsors say is necessary to prevent the creation of government-controlled programmable money that could surveil Americans' financial lives. The Federal Reserve itself has stated it doesn't intend to proceed with a CBDC without clear support from both the executive branch and Congress. The message from the current administration is to prioritize private sector innovation, like regulated stablecoins, over a state-run digital dollar. This resistance isn't just in the US. As central banks worldwide push forward with pilots, they're meeting public skepticism. People are realizing that the convenience of a digital currency might come at the unacceptable cost of their freedom. Beyond politics, the most powerful resistance is the growth of the very technologies CBDCs are meant to supplant: decentralized cryptocurrencies. For every person who fears the control of a CBDC, Bitcoin offers an escape hatch, a parallel financial system that is open to anyone and resistant to censorship. The existence of these alternatives is a crucial check on state power. If a government goes too far with its CBDC, imposing negative rates or restricting purchases, citizens have an off-ramp. They can move their wealth into a system their government can't control. This competition forces governments to think twice about their most draconian plans. The simple fact that you can leave keeps the system you're in more honest. We're at a crossroads. The definition of money is being rewritten, and two opposing forces are fighting for the pen. On one side, you have a global coalition of central banks racing to build a new financial system. They promise efficiency and security, but the central bank digital currency they're designing is a system of potential surveillance and control. We've seen the blueprint in China's e-cny pilot, a tool for social engineering. We've seen central bankers admit they see CBDCs as a response to the threat private innovation poses to their monopoly. On the other side, there's a decentralized movement powered by technologies like Bitcoin. It offers a different path, one based on individual sovereignty, open access, and math rather than government decrees. The choice is stark. Will we live in a world of financial transparency for the citizen and opacity for the state, or will we have the tools to protect our own property and privacy? The stakes couldn't be higher. This isn't just about technology. It's about power. It's about whether we will be the masters of our money or whether our money will be used to master us. What do you think? Are CBDCs an inevitable step forward, or are they a Trojan horse for tyranny? Let me know your thoughts in the comments. The debate we have today will shape the world we live in tomorrow. Do your own research, stay vigilant, and question the official narratives. The war for your wallet has already begun, and ignorance is a price you can't afford to pay.